Motor City's fate, factories, and tariffs. A struggle between the hard economics of global supply chains and Washington's tariff assault is raging between Detroit and Michigan. Since spring, additional taxes on steel, aluminum, and automobiles have caused price shocks. General Motors has implemented reshoring plans and absorbed multi-billion-dollar losses. In the second quarter, Ford lost hundreds of millions, and Stellantis reduced shifts and halted plants. Immediately, the courts overturned broad tariffs. Even the governor of Michigan begged Washington to do something. What are the implications for model lineups, pricing, and employment? Let us dissect this. 1. The first hit of tariff. Whiplash, Detroit. The first hit of tariff. Whiplash, Detroit. The 2025 tariff hike was hardly a surprise. It struck directly into supplier contracts, factory floors, and balance sheets. A 25% charge on imported automobiles and parts was implemented in April, while Section 232 tariffs on steel and aluminum doubled to 50% in June. Models that are manufactured in America still use foreign electronics, metals, and interiors. As a result, the cost ripple from ports to prices happened virtually instantly. Automobile manufacturers rushed to incentives were used to preserve demand, but the data spoke for itself. GM's core earnings was cut by 32% in Q2 due to a $1.1 billion loss. Stellantis was suspended as Ford was slammed with a $800 million levy. Layoffs at U.S. suppliers due to plants in Mexico and Canada. In the meanwhile, when tariff shipments arrived, dealers prepared for sticker increases. Canada, the United States' leading supplier of steel and aluminum, was drawn into the conflict when taxes on non-U.S. goods increased to 35%. A 90-day reprieve for Mexico, but planning was still halted by uncertainty. Then a twist was added. Automakers are in legal limbo as a result of courts ruling that the majority of tariffs are unlawful. Detroit's automakers realized the shock was simply the first phase when everything had settled. Within the industrial walls, survival was the next obstacle. Reshoring, retooling, and battery bets are the factory pivots. Battery bets, reshoring, and retooling are factory pivots. Detroit's purchasing teams went into surgical mode once the first shock subsided, frantically rebid contracts, certified backup suppliers, and increased local content, even at greater costs, to reduce geopolitical risk and tariff vulnerability. Quick repairs were implemented by focusing on high-margin trucks and SUVs in the product mix because tooling upgrades and approvals took time, reducing incentives and delaying releases to prevent introducing new models during periods of high volatility. In its most audacious move, GM committed $4 billion to retool rather than construct new facilities in order to expand plants in Tennessee, Kansas, and Michigan. The goal is to recover a portion of the $4-5 billion yearly tariff drag by adding over 2 million units of U.S. capacity in the next 2 years. However, batteries are the silent powerhouse. In order to lessen their dependency on refined inputs from China, automakers are revising motor and cathode designs and establishing cell collaborations in North America. Price leverage, resilience, shorter supply chains, and fewer choke points are more important than cost alone. In the meanwhile, factories are forced by legal ambiguity to include flexibility into sourcing, regardless of the court's ruling. But without buyers, manufacturing fixes are meaningless. What is the current situation on the lot? Before we go farther, would you please hit the like or subscribe buttons? By doing this, we can connect with additional car enthusiasts like you. Showroom shifts, dealers, buyers, and pricing pressures. 3. Buyers, dealers, and pressures on prices cause showroom shifts. Take a step anything at all and the same query remains. Is the price increase happening again? The automakers attempted to mitigate the impact. Through June, Ford fully committed to nationwide employee pricing before discreetly removing stickers from cars made in Mexico. While Nissan stopped accepting new U.S. orders for Mexico-built Infiniti crossovers in order to preserve domestic allocations, Volkswagen introduced an import surcharge hidden within destination prices. However, buyers are quick to adjust. Trims or option bundles were dropped by some, but others shifted toward with insurance and financing rates continuing to rise. Hybrids and efficient cars can help control overall ownership expenses. Rather than risking their money on costly new technology, fleet managers extend replacement cycles. Midway through, Dealers rely largely on certified pre-owned vehicles to maintain acceptable payments as incentives become increasingly structured. There are no big savings when prices are rising. Anticipate mid-cycle refreshes that prioritize useful, high-value features over low-earning technology. The April shutdowns in Windsor and Toluca by Stellantis demonstrated how policy shocks affect labor and supply, and courts are now contesting the legitimacy of tariffs. Pricing teams have two different strategies for both scenarios. The story is not limited to the United States. In their own ways, China and Canada are influencing Detroit's future. Canada's leverage versus JAS north of the border. Canada's leverage and China's grip are contrasted north of the border. China's hold. Canada hasn't retaliated with a comparable level of force. It's engaging in leveraged behavior. Washington increased USMCA duties on non-EU goods to 35%, but this did not change the situation. The majority of U.S. crude and aluminum in 2024 are still supplied by Ottawa. A record of 4.1 million barrels of Canadian oil were processed daily by American refiners following the TMX expansion. Canada Room is able to provide priority to domestic processing and mining permissions for vital minerals such as nickel, lithium, cobalt, and rare earths because of its reliance on energy and materials. Retaliate rather than waste bullets on tit for tat. Meanwhile, the upstream wildcard is still China. Rare earth magnet alloys and battery precursors are still refined Chinese inputs used in American automobile manufacturing. Regardless of tariff schedules, slow roll techniques or export limits can raise prices and cause manufacturing delays. Automakers are creating workarounds and policymakers are supporting North American processing because of this. Motors that require less rare earth and are more varied modular bombs and cathode chems. Routes and suppliers are at risk of being split up in the short term. Designing cars that are less susceptible to choke spots in a single nation where global leverage and local costs collide is the long-term hedge, while industrial coordination with Canada is the medium-term strategy. The key question is, what exactly are the upcoming 24 months going to bring? 5. Next 2 years, product mix, jobs, and prices. Next 2 years, product mix, jobs, and prices. Detroit's most likely course involves a pivotal 2-year period. Although tariffs still exist in some form, the pressure is lessened by courts or carve-outs. On import-heavy models in particular, automakers will accelerate their reshoring plans while passing along a portion of the increased costs to consumers. The average transaction price remains stable, and the incentives are still more focused and limited. Entry cuts make monthly installments more affordable. For affordability, dealers rely increasingly on certified pre-owned vehicles. Reductions in overtime and pauses, along with hiring linked to retooling and the expansion of battery supplies, maintain uneven employment. It is supported by GM's $4 billion expansion in the United States. Positive outcomes include stabilizing pricing, reducing expenses, and providing policy relief for essential inputs. Launches by automakers might be delayed, EVs and hybrids would expand more quickly, and suppliers would become more visible, all of which would help jobs stabilize sooner. The worst-case scenario is that China tightens exports or tariffs increase. The market shifts toward trucks and SUVs with strong profit margins, prices rise, and features are reduced. Cheap cars are getting smaller. As more U.S. capacity becomes available, leasing becomes more necessary and layoffs increase. Most notably, the appeals court's decision that flexibility is the best means of survival, which results in the ultimate decision. What is the winning playbook for Detroit? In conclusion, Detroit is at a crucial juncture. Detroit has the ability to control readiness but not tariff wins. Clear, flexible manufacturing, varied sourcing, and a focused product strategy are the winning formulas. Reshoring must proceed as planned. Materials and battery cells from North America must be secured. Additionally, designs should avoid relying on choke points in a single nation for clients. Excellent ownership value and pricing transparency. Policymakers will start using CPO programs, warranties, and service as their new trust currency. Relieving essential areas by surgery may have an impact on employment and affordability. When it comes to controlling the motors, magnets, cells, high-volume platforms, and producing lucrative hybrids and electric vehicles, Detroit needs to establish itself as a necessary company. Turbulence from